Hi, everyone. Welcome to another episode of Money Monday. Today, we're going to talk about something pretty specific called S-Corps. I've been hearing a lot more about these coming up again because we just got past tax season. S-Corps are really tempting, and especially a lot of performers end up being pretty tempted by S-Corps because the possibility of maybe I don't have to pay as many taxes this year, which is pretty tempting. Before I do jump into that, though, I did want to do some quick announcements. We have a couple of events coming up. For instance, did you know that we have another fireside chat with Bob coming up at the end of this month? That's going to be May 25th at 4 p.m. Mountain Time, 6 p.m. Eastern. That's going to be a fireside chat with Bob about crypto and you. Crypto's gone up and down. Right now, crypto is about half of what it was at its peak. I think it just dropped below $34,000 per Bitcoin. So what's going on there? Has the fad kind of finally worn off? If you're curious about crypto, come on, check this out. We're gonna show you how we use crypto within our portfolios. But back to S-Corps. Like I said, a lot of people end up getting tempted by this. What is an S-Corp? Really quickly, an S-Corp is a way to kind of file your business with the IRS. It's different from like a sole proprietorship or an LLC. I'm sorry if I'm throwing a lot of really big words at you, but basically, normally, when you have a business, you get income. It's considered it goes right through to you. If you have a sole proprietorship, considered wages. You can deduct expenses from it, which is great. But then you pay taxes. You pay income tax on the wages. You also have to pay Medicare and Social Security tax on it. If you have a W-2 job, if you look at your paycheck, you're going to notice there's a line for deductions for Medicare, and there's another line for, it might say FICA, FICA, it might say Social Security, it might say SSWT, Social Security withholding tax. There is a tax for Social Security anytime you earn an income. When you have a W-2 job, your employer actually matches the taxes that you're paying. So you don't see this happening, but your employer is paying taxes in order to be able to pay you money. When you are self-employed, when you run a business, you don't have an employer doing that for you. You are your own employer. So you end up paying that one normal line, you end up basically paying double what you normally would compared to a double W-2 income. That gets annoying to a lot of people who run a business, so they turn to an S-Corp. Basically, this is where S-Corps add complexity, but they can help protect you from some of those taxes. And in an S-Corp, the S-Corp is saying, we're going to pay a little bit in wages, we're going to pay a little bit in wages, but then the rest of the money is going to go to the business owner, you, through a dividend. It's like you own stock in a company and you get a dividend. You do not pay Medicare and Social Security tax on dividends. So you end up getting to save a lot of money through that because you're avoiding that self-employment tax. Sounds great, right? Sounds all really, really cozy. No more paying those taxes. But remember, this is where I said complexity is coming into the picture, because that's a simple sentence to say. We're paying wages and we're also paying a dividend. But then when tax time comes along, suddenly you have to file all the paperwork to track all of that with the IRS. You got to make sure that you're paying yourself wages. You got to track exactly how much did you give yourself in wages. Was it a reasonable wage for the industry that you're in? And then you also have to file a K-1, another tax form, in order to be able to track the dividends that you also received from your business. So a lot more complexity comes into this. There's a lot of rules of thumb. People in the entertainment industry use S-Corps a lot that I've seen. There's a lot of rules of thumb out there. One really simple rule of thumb that I saw from one website was, don't think about using an S-Corp until you're making at least $75,000 a year just from performing. Why? Because you're adding a whole lot of complexity. If you're probably going to want an accountant to be able to help you with the taxes. You got to make sure that your corporation is filed every year. You got to pay any annual registration fees on your corporation. It's a whole lot of complexity. And honestly, if you're not at a point where you are where you have an accountant, where you can afford an accountant to help out with the complexity, if you're not at a point where you're already maxing out your normal IRAs and retirement accounts just on your own, then you're probably not at a point where you need this extra complexity to hide from some taxes. Because there's another downside too. You're not paying Social Security tax on any of those wages. If you do this for a long period of time, you get to retirement, and then suddenly your Social Security benefit is going to be incredibly low because they've only seen that you've had very low wages for the past however many years. Because remember, your Social Security benefit is determined by how much you're getting paid. So you could accidentally be shooting yourself in the foot and you're not even aware of it. So again, if you're not at a point where, I think the good rule of thumb is that $75,000 a year from performing or your industry. If you're not at that point, if you're at a point where you don't want to hire an accountant to handle the complexity, if you're not at a point where if you're not maxing out your IRAs already, then these extra tax benefits there's simpler ways to get the tax benefits. There's simpler ways to do it that don't cause as much stress. They're probably going to end up saving you the same amount, if not more money, and that also are not going to end up hurting your retirement odds, your retirement benefits when you hit that age. Because that does happen. The whole point of an S-Corp is that the ideal world is that you have enough income, so you're saving money on taxes. You're able to put that money that you're saving to work for you in investments. Because with an S-Corp, you can create bigger retirement accounts. So you can put that money to work for you. But if you're just at a point where it's like, I can't even, I'm not even saving $6,000 a year for my IRA, then the S-Corp is probably adding way too much complexity for your situation. Everybody's situation is ultimately different. So this is the kind of place where you want to, and you need to consult a tax professional for it, for this kind of thing. You're adding a whole lot of complexity. It might not be even worth it. A whole lot of stress for nothing. If this is something that interests you, feel free to reach out to me. I'll walk you through. Maybe it is a benefit to you. Maybe it's not, because there might be cheaper ways to actually save that same amount of money. Who knows? This is where a financial professional or tax professional will definitely be able to help you out. Thank you all so much. This has been another episode of Money Monday. I look forward to hearing from each and every one of you. If you have any specific questions about S-Corps or anything like that, post them in the comments here. I would love to hear about them. Talk to you all soon. Bye.